So if you've been paying attention to the markets at all over the past 24 hours, you know exactly what I'm about to talk about. Bitcoin absolutely tanked yesterday, and I'm talking about a massive drop that had people checking their portfolios every 5 minutes, probably questioning every life decision that led them to invest in crypto in the first place. We saw Bitcoin plummet from around 102,000 all the way down to 95 in what felt like the blink of an eye. And honestly, if you weren't prepared for this kind of volatility, it probably felt like your savings account just got set on fire. The thing is, this isn't the same small correction or little dip that we can just brush off as a normal market fluctuation. This was a legitimate crash that wiped out billions of dollars in market value across the entire crypto space. And it left a lot of people wondering if we're entering another crypto winter. Now let's talk about Michael Saylor for a second, because this guy has basically bet his entire company's treasury on Bitcoin. Well, yesterday's crash hit him particularly hard. Michael Saylor and his company MicroStrategy are reportedly down $3.5 billion on their Bitcoin holdings after this crash. But here's the thing that I think is really important to remember. And this is something that a lot of newer investors or people only getting into Bitcoin over the last couple of months or years might not fully appreciate. This is not the first time Bitcoin has experienced massive pullbacks like this. In fact, if you look at Bitcoin's entire history, these kinds of crashes are almost like a routine. They're a part of the Bitcoin experience. If you go back to 2017 when Bitcoin nearly hit 20,000, everybody thought it was going to go to a couple 100,000 by the end of the year. Well, it proceeded to crash all the way down to around 3,000 over the next year. That's an 85% drop from the all-time high. People who bought at the 2017 top had to wait literally years just to break even again. Then we had the 2021 bull run when Bitcoin hit 68,000. And again, everyone thought it was the same. We're going to go to six figures this time. And then what happened? It crashed all the way down to around 15,000 by the late 2022. The point I'm trying to make here is that Bitcoin has always been extremely volatile. These massive swings both up and down are part of the crypto market. Bitcoin is an asset that rewards long-term holders who can stomach the volatility and stick with it through multiple market cycles. And this isn't even just a Bitcoin thing right now. If you look at what's happening across all markets, we're seeing massive pullbacks everywhere. Even in gold, which is supposed to be a safe haven asset that people flee to during times of uncertainty, it's down right now, significantly. And then if you look at things like silver, that's being hammered even worse. Traditional markets are showing weakness. And the idea that you can just park your money in precious metals and ride out the storm is being challenged right now, because even those supposedly stable assets are experiencing serious volatility right now. So this isn't just a crypto being a crypto thing. This is a broader market phenomenon where assets are getting sold off across the board. And even in the traditional safe havens aren't providing the protection that people expect them to. It makes you wonder what's driving all of this fear and uncertainty right now in the markets. And that brings me to what I think is the most important point of this whole discussion. For people who genuinely believe in Bitcoin's long-term potential, opportunities like this are exactly what you should be hoping for. I know that sounds crazy when you're watching your portfolio value drop by thousands or tens of thousands of dollars in a single day, but hear me out. If you truly believe that Bitcoin is going to be worth significantly more in 5 to 10 years or even 20 than it is today, then every major dip is a chance to buy more Bitcoin at a lower dollar cost average. Dollar cost averaging is one of the most powerful strategies for building wealth over time, especially in volatile assets like Bitcoin. The idea is simple. Instead of trying to time the market perfectly and buying at the absolute bottom, which is basically impossible to do, you just buy regularly regardless of the price, even if it drops significantly. And that allows you to buy more Bitcoin at an average price, which lowers your overall cost basis. For the people who have been dollar cost averaging into Bitcoin over the past several years, buying through ups and downs, through the bull markets and the bear markets, they are sitting on massive gains right now, even after yesterday's crash. The people that are hurting the most are the ones who tried to time the market or who bought at the top out of FOMO, and who don't have a long-term strategy or conviction of what they're actually investing in. Over any meaningful time horizon, Bitcoin has massively outperformed virtually every other asset class you can think of. Compared to the S&P 500, which is generally considered one of the best long-term investments you can make. The S&P 500 historically returned around 10% year on average. That's a great traditional investment, and it's the backbone of most people's retirement portfolios. But Bitcoin, despite all its volatility, despite all the crashes like the one we seen yesterday, has returned hundreds or even thousands of percent over various time periods. Yes, there have been years where Bitcoin was down significantly. Yes, there have been brutal bear markets that tested the resolve of even the most hardcore believers. But if you zoom out and look at the big picture, the returns have been absolutely insane. Gold and silver, which again are supposed to be these stable stores of value, have barely kept up with inflation over the long term. Gold has averaged maybe 5 to 7% annual returns over the past couple decades. Silver is even worse with more volatility and lower returns. So when people ask me whether Bitcoin is still a good investment after the crash like yesterday, I point to a long-term track record. So here's my outlook for Bitcoin in 2026 and beyond. I think we're going to continue seeing volatility. Days like yesterday are only going to happen again. Probably multiple times. There will be more crashes. Traditional financial institutions are still figuring out how to integrate Bitcoin into their existing systems. I think that institutional adoption, despite setbacks and volatility, is going to increase. I think that younger generations who are entering their peak earning years understand Bitcoin in a way that older generations don't. And they're going to increasingly allocate portions of their portfolio to it. And I think that as we move further into this decade, as inflation continues to destroy purchasing power, Bitcoin being a store of value is only going to become more compelling to more people. So if you like Bitcoin and think that it's a good investment, make sure you subscribe for more or leave a comment below what you think.